So, with real estate finance, there are so many areas that are, I think, mysterious. We're real estate professionals. We understand what it means to go obtain real estate financing, loan applications, appraisals, all of that, and we can talk a bit about it. But I really would like to kind of ask some just the overarching questions of the entire panel, and they'll speak to it. And then we'll have some specifics in their particular segment of the finance market. So I think my first question, and one that I hear frequently, especially when we have the Federal Reserve kind of getting involved in interest rate adjustments, what are your thoughts about interest rates in 2019? Do you have any forecasting, prediction, good guesses? What are your thoughts, any of you?
Ladies first.
Okay, thank you. Based on everything that we read and the forecast with, real estate, car, and all the other things that we've heard, basically rates are going to go up. It's between where it's going to be in 2019 and 2020. It's going to be around 4.8 to 5.3, somewhere in that arena. And in terms of the real estate market, the forecast is that it's going to be declining about minus 3.3. So not really a lot. So rates right now, though, they're still very, very low. We're still doing 30 years jumbo at 3.875. So, it's just the market thinks that, oh my God, rates are up, and, they're kind of sitting on the sideline. So I think, we're still in a great, great market. And because the economy is doing so well, and, people are going to earn more money. So therefore, the affordability is higher. So real estate is still going to be pretty strong because, people think, okay, rates are going to go up, so then housing is going to go down. And that's not really exactly what is going to be happening. So I think, that's where, we're looking at. We have to just educate our buyers, that, okay, if the rates do go up a little bit, how much affordability are you going to, it's not just about the rate, but how much less can you buy? So that's really what we need to be looking at. But historically, we're still in a pretty good market, and we need to just get the buyers going. And I think inventory is probably one of the key issues here. So as we have more inventory coming in, I think we'll see the market picking up again.
Yeah. You guys are both nodding. It sounds like you agree.
Yeah, there's some technical consensus out there since the Fed stopped purchasing mortgage-backed securities back in 2017. The consensus was that rates would naturally go up because they've been artificially kept so low for so long. But at the same time, I've said that for the past 12 years that I've been in the business, and I've been wrong every year except last year. So we'll have to see if 2019 continues the trend. But as she alluded to, it's still historically low rates. And to be frankly honest, I haven't seen that affect my business as much as the perception might be out there.
I think if I can add, I think right now is a really excellent time to buy because it seems that rates are lower than they've been in the last 6 months. Right now, as Sheila mentioned,
they're lower?
Yes, they're lower. And the market and the general public doesn't know that quite yet, I don't think. Everyone thinks that rates are so high because of all the publicity. The Fed, when we talk about rates, there's different rates, but everyone has in their mind that all the rates are the same. So the Fed controls federal funds rate, but then there's also the mortgage rates that are controlled by, as owner said, mortgage-backed securities. Yeah. So what we saw recently was the Fed has raised rates, and then it softened the financial markets. Money is going into mortgage-backed securities, and that's lowered the 30, the long-term rates. Yeah.
And it's interesting too because I think if I recall, there are conforming loans and jumbo loans, right? And I think there was a conforming loan limit adjustment recently. Maybe you could speak to that. But aren't the conforming loan rates lower typically than jumbo rates? Is that not the case? Because it seems like I see conflicting information about that.
typically, conforming rates are lower. And it may be for some lenders lower than other lenders. We at B of A, we actually put anything over the conforming loan amount, which is now I think 484,000 and change. We actually put those loans as long as the clients match the guideline of a non-conforming, the jumbo loan. We actually put them in our jumbo loan program because we have better rates for our jumbo products than we do our conforming.
So you can do that. You can give them the jumbo rate if it's better.
If they
than
qualify for the jumbo product, the reserves, the DTI, and all of the other things, if they qualify with the guideline, then we can put it in the jumbo rate so that they have a much better rate than actually they would in a conforming rate. So not all lenders maybe be able to do that, or they have different rules and regulations. I don't know how you guys,
I'll support that point. I mean, you know, typically, yes, as Sheila alluded to, they are higher on the jumbo financing, but big banks really have done this for some time now. They're actually buying up the market. Like, so they'll offer great pricing on jumbo financing because they want the depositor to a relationship with the client. So, you know, so that's a caveat that's important to highlight, as Sheila alluded to with her business. But I mean, even with conforming rates, as we just alluded to, I mean, we're seeing rates on different loan products, high 3s, low 4s. So
borrow money. Borrow money. I mean, it's cheap. It's cheap. Yeah.